Hey, good morning, everybody. Today is Friday, May 8th, 2015. My name is Cliff Backus. I am the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. Markets attempted a weak rally yesterday as stocks advanced on lighter trading volume. I also found it interesting that although all the major indexes advanced yesterday, the IBD 50, which I consider a proxy for leading growth stocks, was down, suggesting that market leadership was not really on board with this rally. Advancing issues bettered decliners by 3-2. Large caps continued to outperform small caps on a 10-day moving average basis, but for the second session in a row, small caps bettered large caps yesterday. This is a good sign for the short-term bulls since August of last year. During market corrections, large cap stocks have outperformed small caps on a 10-day moving average basis. The correction low has coincided with a crossover of small caps outperforming on a 10-day basis. Despite small caps flexing their muscles in the past 2 days, our 10-day moving average of large versus small stocks is indicating that the correction may not be over. With the market in correction, all traders will want to take advantage of any short-term market bounce to accumulate cash. In a market in correction, cash is king. During the market in correction, we will continue to watch for industry group rotation. When the market does resume the uptrend, we want to be where the power is. So, let's see where the strength in the market is rotating to. What you're looking at on your screen is the HGSI High Growth Stock Investors warehouse of 7,000 stocks, filtered by stocks and groups moving to the upside. We then take the top 101 stocks of that filter and we import them into our Spectrum Analyzer. What the Spectrum Analyzer does is it gives us a snapshot of where the strength in the market was yesterday. By following the daily industry strength, we should be able to pick out industry group rotation. So where was the strength yesterday? The most powerful industry group yesterday was semiconductor devices, followed by biotech, consumer finance, airlines, and e-commerce discretionary. Recently, we've seen a lot of strength in semiconductor devices. Biotech has been strong for well over a year now. We've also seen a lot of financial stocks recently, so that may be a good place to begin looking for strength in the market, particularly when we confirm the next uptrend. Let's take a look at the Nasdaq Composite. Yesterday, the Nasdaq Composite was up 25.9 points, or just over 0.5%. Nasdaq closed at 49.45 and found resistance at its 50-day moving average. We show the 50-day moving average here in red. Nasdaq closed near the top of its daily trading range, which is a little bit of a short-term bullish signal. Right now, the Nasdaq is bracketed by support down here in the 48.11 area and resistance up here in the 50.42 range. The Nasdaq is on a don't buy signal on our 1 to 6 month timing model. Trading volume on the Nasdaq yesterday was below the prior day, but more importantly, because the Nasdaq was up, yesterday was day one of our confirmed rally attempt. For you followers of William O'Neill, the market is currently in a correction. We've been in a correction since May 7th. Yesterday, because it was an up day, was the first day of our rally attempt. We can begin looking for follow-through in this market as early as Wednesday of next week. Let's take a look at the S&P 500. The S&P 500 yesterday was up 7.85 points, or 0.38%. It closed at 2088, and yesterday the S&P tried to get above its 50-day moving average. The 50-day moving average we show here in red. It actually traded above the 50-day moving average for a portion of the day, but closed below it, showing the resistance that that level has. The S&P closed at the top of its daily trading range. Right now, the S&P is bracketed by support down here in the 2040 range and resistance up here at the 2120 area. We see the market put in this high at 2120 and has since been trying to break above that level, but finds resistance there. The S&P has been in a market in correction since May 7th. Yesterday was day one of the attempted rally. We look for follow through as soon as Wednesday of next week. Let's take a look at the MACD histogram. Our MACD histogram continues to trade below the zero line and is in a downtrend, a short-term downtrend. Because we're trading below the zero line, which is bearish, and because we're in a short-term downtrend, our immediate bias on the S&P 500 remains bearish. I want to take a quick look at a couple of stocks. But before we do that, just a quick note. All of the individual stocks that we talk about in our video market reviews are from our universal watch list, which you can view in our daily spreadsheet. To qualify for the universal watch list, a stock has to have satisfied at least 72% of our stringent technical and fundamental criteria, and currently satisfy at least 62%. Out of our trading universe of over 7,000 stocks, there are currently only about 70 stocks that meet these strict criteria and make our universal watch list. These are the only stocks that we review in our daily video market review, and for the most part, they're the only stocks that we use in our trading strategies. That noted, it seems that every day recently we wind up talking about Paycom software. Paycom provides cloud-based human capital management software that manages employment lifecycle for employers and employees. The stock has been in this third stage base with a pivot point of $35.86. Paycom gets a 72% checklist rating. We've been watching this trend line in Paycom. Yesterday, Paycom gapped above that trend line on good earnings results, giving us a pocket pivot. You can see that Paycom gapped above its 50-day moving average, its 21-day exponential moving average, and its 10-day simple moving average. Trading volume yesterday was higher than any down day in the past 10 trading sessions, which is a definition of a pocket pivot. Aggressive traders can buy Paycom here, keeping in mind that the market's in correction right now, and our 1 to 6 month timing model is on a don't buy signal. The next stock I want to talk about is Qorvo. Qorvo manufactures RF integrated circuits used in mobile devices, base stations, wireless networks, and metering devices. The stock's in a third stage base. It has a pivot point of $85.63, gets a 76% checklist rating, and yesterday we had a nice buyable gap out of Qorvo. You can see that the stock gapped higher, taking out resistance at its 10-day simple moving average, its 21-day exponential moving average, and its 50-day moving average. Also took out trendline resistance right here. Trading volume was heavy yesterday. You could also call this a pocket pivot, as trading volume yesterday was heavier than the highest down day in the past 10 trading sessions. Qorvo can be bought here by very aggressive investors, again, keeping in mind that the market's in correction and that our 1 to 6 month timing model is on a don't buy signal. That's about all I have for today. If you want to talk about Paycom, Qorvo, or any of our trading or market strategies, please feel free to give me a call. Drop me an email or make an appointment. Come by the office, see what we're up to. If you're out of the area, we can set up a Skype session. A reminder, if you've not already done so, please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again on Monday. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & Liqueurs, Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & Liqueurs, Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & Liqueurs, Incorporated believes to be accurate. Ohannes & Liqueurs, Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohannes & Liqueurs, Inc., its affiliates and subsidiaries and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.